Hey everyone, it's Helen from S&B Deal Hunter. Today we have BG Lemmon with us from the Brynavon Group.
Mhm.
Family office actually started by BG's grandfather that focuses on management buyouts, mostly in manufacturing. Really looking forward to hearing BG's story, more about the family office, and really great to have you on today, BG.
Thanks, Helen. No, I appreciate it. Glad we finally got this scheduling coordinated after some back and forth, but it's been a wild start to 2025 for the world, obviously, and and a little bit for me. So glad we're able to make some time today.
Yeah, no, thank you. And thank you for being a longtime subscriber as
Hmm.
well. I
Absolutely.
guess first tell us more about the family office and your role, what you
Hmm.
guys invested in, some of your portfolio companies. Let's start there.
Yeah, so the history of Avon. I'll make a long story short. Started by my grandpa about 50 years ago. He was a banker, and he was selling a division of the Singer Corporation, which is a sewing company. And at the time, it was a big company. And in 1972, they were about to invest in something called software. And as a
Wow.
result, they were going to sell off the hardware division. And so my grandpa was talking to the president of the hardware division, John Northway, and John was pissed. He was like, I don't get why they're selling us. We have the largest runway, blah, blah, blah." And my grandpa said, "Well, why don't you buy the business?" And John said, I don't have two dimes to rub together. And we have, the piece of paper in our office over here, where they drew up the LBO, and that, became the first deal.
Wow.
And so that was 1973. We closed. 1983, my dad joined. 1994 was 1983 dad joined. 1994 he took us public. We had about 15 small businesses under one umbrella. My dad took about 10 of them public, put the other five in a private company, and it was again manufacturing focused, which was tough in the 90s with globalization and things like that. So it didn't work out. And after he unraveled the, public entity, he went back to the private world, and what we found was sort of the foundation for what my grandpa's first deal was in that management buyout with John Northway. He found that when management teams of these smaller businesses, which we define as 1 to 4 million EBITDA, when the management teams have real ownership, real changes happen and the alignment happens, obviously between owners and managers. And so it's just better to co-invest. So since 2004, it was just my dad and my other boss, Patty Wolf, just the two of them buying and investing in small businesses. I joined in 2019. And again, since we're so small and lean, we all wear the same hat. So some people are looking out for deals, some people are managing our portfolio companies, things like that. And then we're lucky enough to have my brother join this past summer. So we're now at a whopping four people, and
A
we
lot.
have four portfolio companies currently.
And what prompted you to join finally?
Yeah, it's funny. All my friends give me some crap. From the get-go, I was like, I'm never working for my dad ever. I just saw it as the easy way out. I never even asked like what my dad did growing up. I can't believe it because obviously, now that I'm a working professional, you spend a lot of your day working, and I was just so even in high school and college, I was like, I don't want to know what my dad's doing. Um, so after college, I worked for 2 years in New York doing muni finance actually, and I worked at another company briefly before moving back here with my wife, and I was sort of in between jobs, bit of an identity crisis, didn't know what to do. And then my best friend, said to me, he's like, "Dude, why don't you just talk to your dad? Like, it just makes sense. He has a great job. You should see what it's like at least." And so, I had just gotten engaged and I felt a little awkward, still not having a job for a little bit. So I wanted to pull my weight. So I took my dad out for breakfast and heard more about what he did, and thank God I joined because what I love about Brynavon is obviously it's fun to work with my dad, but I feel like what we're doing, our mission is sort of truly aligned with who I am as a person. So
No, and tell that's a great story.
mhm,
Tell us more about the four portfolio companies too.
mhm. Yeah. So again, one of my favorite parts about Brynavon is we're not a fund. We have super patient capital. Our average hold over the last 20 years of our companies is about 13 years. So
Wow.
very different from a traditional investor. So a lot of the guys we work with today, I knew as family friends first. Like I didn't even know the nature. Like I said, I kind of stuck my head in the sand when it came to my dad's profession. So I just knew these guys as family friends. So our, first company, maybe I'll just go geographically. In Pennsylvania, where we're based out of, we actually do have a company. It's our most recent acquisition. It's a stainless steel foundry. Bought it in 2022, and that was a cool story. I'll make a long story short again. The owner was trying to sell to an ESOP, but it wasn't working out, and he was 83 years old. And we were first brought in by his wealth manager, who was a friend of my dad, and just trying to explore what he wanted to do. Well, we weren't even coming in as buyers. And so my dad asked him a question, what's your ideal situation? How do you want to proceed? And the guy, 83 years old, broke into tears. And we're in a conference room with bankers and all of his advisors and his management team, and he's crying, and we were all paralyzed. And then after a minute to gather himself, he sort of was like, I just want somebody to take my business forward, and to help my employees. And so, he didn't even know anything about us, and we're obviously looking at each other like, wow, this is why we do what we do. Um, so we did that deal, and that one was fun for us because, it was probably doing a million and a quarter in EBITDA in the first year. And there's some tailwinds and some factors of luck, I will say. But in the first full year of our ownership, it went from a million and a quarter EBITDA to three and a quarter in EBITDA,
Wow.
right? And so what that told me was, and everyone has different philosophies when it comes to managing businesses, but there's a great book, The Great Game of Business. And it talks about, ESOP owned business, and the author was talking about when you are sharing data with your employees, they're able to react and do things better. And so, the new president came in and was really sharing data with everybody, and you could sort of see the change happen. So that's one of our companies. The other one, so it's in Virginia, Richmond, Virginia. We've owned since 2001. So 24 years. And it's been a fun one. That's called Avcom of Virginia. They're a spectrum analyzer manufacturer. Um, so pretty much, when a satellite sends a signal, these devices that they make can decode them and see make sure that everything's going the right place. So a lot of government applications, casino applications, actually, interestingly enough. So
How so? I'm curious.
yeah,
Casino
yeah,
applications.
well, I will say that one I don't know enough. That's the one company, and I can get more into how we function with our portfolio companies, but our board calls, a lot of the stuff it's a little technical for me. And so I never pitch us as the experts, and I think that's why people like working with us because the management teams, they know the business better than we do. Ooh, that's why we let them do their job, and our job is to support them. And obviously, I'm 6 years into this. Um, my dad's been in this for 40 years, so he has a little bit more experience and can help in other ways. But I think we all sort of joke AvCom is really technical and is tough. So how does it work with the casino? I wish I could tell you the specifics, but I know we just have some deals that are contracts that are working with some locally. So it's fun. And again, I try and learn every single time I'm on these calls, every time I'm down there, just trying to learn, trying to learn. Um, so that's Avcom. The other one is out in Carson City, Nevada. That one's called Durabond, and that one's a cool story because my grandpa bought it actually first in 1990. It was part of the public
Wow.
venture, um, with the Owasso Group is what we traded under. And then my dad sold it in 2001 as he was unraveling the public entity. And then in 2015, my dad got a blind teaser saying, largest bearing manufacturer in the country, blah, blah, blah. And again, it was trying to be, hidden.
But he
Confidential.
knew.
But my dad reached back out to the broker and said, I think you have this wrong. I think it's supposed to be camshaft bearing manufacturer. And the broker was like, who do you know? How do you know? Blah, blah, blah. And so my dad was like, we used to own the company. And so my dad reached out to the president, Chuck Barnett, who my grandpa hired. And he's like, Chuck, are you still there? And he's like, yeah, still here. And he's like, and Chuck loves telling the story. My dad had said to him, he's, Chuck, you've spent your whole career making money for a lot of people. It's time for you to make some money for yourself. So my dad bought the business back in 2015, partnered with Chuck. And it's a cool story because this past month, end of March was Chuck's retirement. Um,
Wow.
so we're, super happy, and we were able to get him a nice little payout. We did a little recapitalization, and still more to come for him, but he's somebody that's definitely very much tied to the Brynavon fabric. And then the last one, it's our only non-manufacturing business. It's Pacific Sheet Metal out in Golden, Colorado. We call them the subcontractor galore of the Aspen Valley. So plumbing, HVAC, roofing, you name it, they do it. And that one was an interesting one because it was a father-in-law, son-in-law deal in 2010. And it was a little hairy, and they were trying to go public, but there was still the financial crisis going on. And there was definitely a pretty big seller's note that was sort of part of that. I've said before, we normally don't look at service businesses, but that one was appealing just because of the human characteristics. And again, small story there. When my dad first went in 2010, he got in the car with Lowell, our current president. And Lowell said to my dad, if I had the money, I wouldn't need you here. The second I could buy you out, you're gone. And so my dad was like, all right, like I know where this is going. I'll see where this happens. And so 2018, they finally paid off all the debt. Everything worked out. And Lowell was in a financial position to, buy the business himself. So my dad went to him and said, hey, you can do it now. Like, you want to buy the business? And Lowell said, hell no. We're buying four more of these things. We're running it back. We're going to be the Brynavon of the West. You're stuck with me for another 30 years. So that, I think that says a lot more about my dad and Patty and the relationship they sort of cultivated with our partners.
That's great. And do you guys have a goal of a certain number of acquisitions that you're targeting, or how do you think of that? Because it seems like, obviously maybe you're on your own timeline, but
Yeah.
how do you guys think about that?
If you ask me personally, I'm always like, yeah, we could do 10, we could do 11. My dad and Patty, who are probably a little wiser, and probably my younger brother too, they say probably as currently constructed, our number probably could be 6 or 7 at max. And it's a tough one because over the last 5 years, in this, EBITDA range of 1 to 4 million, it's been a hot market. And we normally you used to buy businesses somewhere between 4 to 6x, and I've definitely been losing out on deals far greater. People are bidding more than 6x, and so my dad always says, be patient. The right deals and the right people will come. Um, and so it'll be interesting to see how that progresses, in the coming years. But um, I had a point, I sort of forget it right now. But yeah, 6 or 7 is probably where we're at. I mean, we can always add people, but we never want to lose out on the quality. You know what I'm saying? I think what makes us special is the way we have our relationships, the way we manage it. And sometimes if you bite too much, you can't manage it all. So,
No, I think what's really interesting is, a lot of folks, they want to buy a business and they don't
mhm,
want to be the operator. And you guys have obviously figured out a way to structure, obviously with management staying on, so
mhm,
that you guys have a small, lean team
mhm.
and can still oversee all these businesses. Can you tell us a little bit more about, I guess, your guys' role, maybe everyone in your family office, and what you then rely on the management to do, and how often you guys communicate and what that looks like?
Right. So with all of our businesses, we always have quarterly board meetings, right? And we do that mostly because we put debt on our deals, and the banks always like to see quarterly board minutes. Um, when we first make an acquisition, we'll visit monthly and make sure everything's moving smoothly. But I think what a lot of managers and even sellers like to hear this from us is that we're not going to bring in new people. We're not going to be there 4 days a week like a consultant almost and telling people what to do. Our whole belief is, what we call management liberation in a little bit, because sometimes at these small businesses, the owners, it's crazy the businesses I've seen, and they're making, $2 million a year. They're taking out 1.5 million, and it's like, they're so comfortable. Why would they rock the boat? They have no desire. They have no need to, threaten what their lifestyle they have. But the management team underneath them, they have all these ideas like, oh, it'd be great to do this, great that, do that. But sometimes they don't have the leeway to do that. So sort of like effort was maybe a situation where, you know, seller was removed, you put the new management team in place, and you see the magic that can happen. And that whole year, like I said, as much as I would like to be, it's the Brynavon way. We could do this for all our businesses. Not saying that we can't, but I think, like I said, we didn't have much impact on the 1.25 million to 3.25 million EBITDA jump. All we did was sort of facilitate the transaction. We managed the banking relationship. That's what, I always say we try and manage all the headaches that business owners don't like dealing with. Um, I will also add, Pacific Sheet Metal out in Colorado, I haven't done as much work with over the last 6 years. But for Durabon, both my brother and I, we've worked on the manufacturing floor.
Love that.
Yeah, my dad, because when my dad started, he worked on the manufacturing floor for a year. Um, my brother worked, I think he worked at Durabon and he worked at another one of our old portfolio companies for probably a combined 3 months. I worked out there for 2 months at Durabon. So we do that sort of work for, another thing we do occasionally is I will get on the phone and I'll hire daily laborers and I'll be speaking in Spanish and saying, hey, are you available? Things like that. So what I tell people is we're as involved as needed. If you don't need me, sort of like Pacific Sheet Metal and you're operating great, God bless you. Let's be partners. But if you need me, if you need us to do anything, whether it's calling people, working on the floor, website stuff, a lot of digital marketing, that's sort of been a new thing that we've been really working on for a lot of our companies. We can do that. So something I said to a recent business owner that she loved was we're flexible,
Love
which I think
that.
is is refreshing to hear for a lot of people.
And walk me through what like day to day looks like for you then.
Day to day, which is, my boss, Patty Wolf, has always said this. Every single day you walk in, it's going to be something new. Uh, and that's why it's fun. And so, you know, our week, we always have like a Monday.com meeting where we have literally a list of everything that we're juggling, that we're managing, things like that. But the big picture stuff that I do is obviously looking at deals. I read your newsletter. I look on Twitter, I look on all the websites, see what's going on out there. Um, there's little projects going on with all companies that I sometimes am involved with that I check up on. Um, Doing just general networking is a good thing so that when you have a deal in place, you have people, quality of earnings people ready, you have banks ready, things like that. But it's one of those things where sometimes I'll have a full work day and I know I'm obviously working, and then I'll go home and I'll be like, what the heck happened today? Like what was going on? But at the same time, I think a lot of our partners are like that as well. When you're at the top of the food chain, I guess with these businesses, you're spread thin. You're doing all these different little things, and you're trying to help people. And I feel like we are sort of the same way at Brynavon.
No, that's super interesting. And tell me more about, deal sourcing,
Hmm.
where, obviously you mentioned that you've seen the market get hotter, which I think is generally true.
Hmm.
Um, how are you guys finding opportunities? Like, what are you looking for? You spoke about how you sourced some previous deals, but where have you guys seen success there?
Yeah, it's very funny. So like I said, the effort deal was brought to us through a wealth manager. Some of our other deals, I'm a member of ACG, which I'm sure a lot of people are. Their local chapters. That's one of the largest in the country. It's a good place to network and find both bankers, brokers, people that will recommend you. There's another networking group that I'm a part of. It's called Figure Eight Dealmaker. It's run by a guy named Jeff Talkman, and he's created this great community where once a month we all get together, sort of share deals, share things that we are seeing out in the world, and even through that sort of networking, I've met a lawyer who's introduced me to a couple deals, met an accountant. So it's one of those things where we biz buy sell, Axial. We're on all the big platforms, and my brother, he's now the acquisition analyst, and he does a great job of scanning it. But I feel like the more quality uh, deals sources are through close referrals and that aren't traditional brokers or bankers. But my brother, like I said, for your audience too, is he's scrambling and he's going all over the place, and you never know where you're going to find the deal. But there's a lot of opportunities for sure.
That's interesting. And given your guys' approach with the management buyouts, how are you approaching the brokers or the
Hmm.
sellers?
Yeah, we always tell both. I mean, so it's one of those awkward things where we tell people, if we talk to business owners, we'll say, look, if you want to go through the process, hire a broker, hire a bank, they do a good job of organizing, the materials and what business buyers are interested in, and they'll create a competitive process, which is great. We also tell sellers and brokers alike that we likely won't be the highest bidder on your business. Because we find, there's a lot of different definitions of the word value. And obviously, with our management buyout structure, we end up partnering with people that value giving the business to their management team. Um, and another thing that we always put in with our deals and agreements is that the management team always has the opportunity to buy Brynavon's equity from us at any point on the exact same terms at which we bought in at. So what
Mm.
so what that means is if we bought, a business that was making a million in EBITDA, we bought it at 5x. 5 million, and then we owned for 13 years, our average hold. And God willing, let's say we took the business from 1 million EBITDA to 6 or 7 million EBITDA. Then on the open market, maybe someone would pay for whole numbers, let's say 10x, so $70 million. Woo, that's super fun. But the management team, if they have the financial means to do it, they can buy it back from us at a 5x.
Mm.
Right? So 35 million. So everyone always says, why would you leave that on the table? And so for us, we say that is sort of what gets our foot in the door sometimes. One, two, if we take a business from 1 million EBITDA to 7 million EBITDA, uh, we're going to be happy no matter what. But three, sort of like I said, like I think I get a lot of fulfillment, and I know my dad does and Patty does, is we get a lot of fulfillment out of seeing our partners sort of complete the process, complete the dream of being business owners. And especially, if you get to that point, if you're lucky enough to get to that point of being 100% owners of the business, it's a true win-win. And so it makes us feel good. So we tell brokers and bank, we're not going to be the biggest bidder on your business, but if you care about, you know, culture, if you care about the story, and keeping everything the same and your employees, we'll probably be your best buyer.
And how often do you think that resonates with sellers?
I wish in this world, I wish it resonated more. I think it does. So I'll give an example. This one breaks my heart still, and I'll keep some names and details out. But I was speaking to a business March last year, 2024, and it was a small manufacturer, about 2.5 to 3 million EBITDA, and it was a fourth generation family business. And I had an hour and a half long call with the owners and was super excited. And I put in a bid about 5.5, it was $14.5 million. And the broker got back to me and said, sorry, we're going with somebody else. And and I said, was it me? Was it, what was it? I was so hard. I thought it was a sure thing. And he said, look, I can't tell you the number. I can't tell you who it was, but somebody bid 2.5 more turns of EBITDA than you.
Wow.
And so in my mind, I'm like, all right, two divided by 5.5, that's almost 40% more. So I'm missing out by 40%. And in that world, banks were tight. No one was lending. It was really tough. So I'm like, so somebody must just be juicing this with equity and the return. Again, I tried to model it. I was like, I couldn't even see the return. Might as well put it in the stock market at that point. Um, so you shake it off, whatever, you move on. A month ago, I just had my kid. I just had a third kid. I was super excited, and my brother was trying to be good and letting me be a dad. But he called me. He rarely calls me. He's like, BG, I got to ask you, what was the name of that business again? And and he told me the name of the business. And I told him the name of the business. He's like, you're never gonna believe the email I just got. And he got an email from the group that ended up winning the deal. And he said, hey, we've got this deal. Um, it was started at $20 million and we've negotiated it down to 12 and a half, but we only have, $300,000 in equity. Would you like to participate in this deal? And I sat there and I was like, poor broker, poor and I feel
Yeah.
like we're seeing that happen a lot more where obviously the big number is super attractive. And I'll tell anybody, God bless you, you've done, congratulations. Because a lot of these people, they've worked super hard for that moment to sell their business for a lot, but it's heartbreaking when you hear a year has gone by, and not only now is the offer lower than what we offered it at, but nothing's happened. And so the deal has since gone away. But I fear that, and I do tell some brokers and sellers, you might run into that situation where people are going to really try and negotiate you down in due diligence. And we always pride ourselves. I feel like, whatever we say on the LOI, we'll keep it. If there is something that comes up in due diligence, we'll try and share in the risk, is what we call it. So maybe more on the seller's note, um, maybe more on an earn out or something like that. But we'll never try and dig it down. And if it really doesn't make sense, we'll just walk away and call it a day. But yeah, hopefully the story resonates a little more with people.
No, that makes a lot of sense. And I think a lot of times people go in sort of maybe not in good faith either. So it sounds
Yeah,
like sometimes that can happen. And no, that makes
yeah.
sense.
I think maybe this is my belief in humanity, but I would like to think most people don't go in. in bad faith or try and get their foot in the door and then negotiate down. I do think there's since 2020, since 2021, there's a lot more dry powder out there, and I know a lot of MBA students are big in the entrepreneurship through acquisition, strategy, and then they're able to raise enough money to buy their first deal, which again, if you look at the asset classes, someone showed me this the other day, if you look over the last 10 years, it's like private equity returns are number one, real estate number two, et cetera, et cetera. So I get why people are doing this. But my dad and I always talk about it. It's what I love about Brynavon is we have 50 years to stand on, 50 years of experience, and it is tough for people that are just getting into the world a little bit.
And who do you find your actual competition on these deals, tend to be?
I get, yeah, in that context, in that deal I was mentioning, we lost out on two MBA grads. So a lot of MBA grads, independent sponsors. But I do think to that point, what was great when my dad's first started this model, 1 to 4 million EBITDA, we described as too big for an individual to buy, but too small for private equity to mess with. So it was sort of no man's land. I would say again, since COVID, a lot of those bigger private equity firms have actually moved down towards that well, usually 2 million is now the floor.
Yeah.
Um, but we're losing out to them too. And again, like I said, those private equity firms, they've been around for a long time. They make money, because they have those operational resources that are important and add value. And so if it makes sense, again, we lose out to them, but it makes sense sometimes why we lose out to them. But there's some that are perfect. And what I say to brokers too sometimes is Brynavon's great because we take the deals that have some hair on it and aren't a perfect fit. They're a little awkward.
Wow.
Um,
That's
and
no, that's super interesting. I guess tell us more about how you guys are structuring these management buyouts,
Mhm.
and how you're financing them.
Yep. So our typical deal, like I said, 1 to 4 million EBITDA, 4 to 6x, and we like manufacturing because there's more assets to borrow again. So usually yeah, we find senior lenders. Uh, this world will be interesting to see, but let's say they'll lend somewhere between 3 to 4 turns of EBITDA, or yeah, turns of EBITDA, and then you can borrow against 80% of the receivables and 50% of the inventory as a line of credit. So we'll use that for debt. Um, Avon usually puts anywhere from 20 to 30% equity in the deal. And our sources there is usually, family money. We have close family friends who invest with us, but sort of comes on a deal by deal basis. And then we usually do get a seller's note, sort of to the effect of, 10 to 20%, depending on the situation. So that is sort of how we structure our deals.
That's interesting.
Mhm.
And do you find, and what's your average sort of like time to close? Are you guys able to move more quickly than your average, I don't know, MBA grad, or
Mhm.
what does your process look like once you actually, get under LOI on a deal?
All right. So once we get under LOI, we always do the quality of earnings first. And it's sort of, we don't do much else during the quality of earnings period because we understand that the acquisition process, it's very disruptive to operators. And so you don't want to throw them six different things at once while trying to manage their business. And also sometimes people want to keep selling their business a secret. So we always start with the quality of earnings. Usually that can take anywhere from 4 to 6 weeks, depending on the flow of information. Once that happens, then we'll get to the next part. We have a spreadsheet that we send to all of our sellers, and we say, hey, here's everything we need. Here's the data room. Drop it in here. And at the same time, while that's going on their end, we're lining up the banking. Like I said, I usually tease it a little bit to bankers first before the quality of earnings is finished. Once the quality of earnings is finished, we send a report to bankers, and my brother and I, sort of juggled that hoop. Um, and then once we sort of go through all the documents and the purchase agreements are starting to get drafted, you know, ideally, I'd like to say, at most 120 days. Um, but I don't even know what the typical MBA due diligence what they promise. I mean, I feel like everyone always promises sometimes even 90 or 60 days, and it's never that. So we always really try and stick true to it. But on our last deal, we struck the LOI in April. We had the target close in July, but then we pushed it out a month because we were actually trying to solve a tax issue for the seller. Um, And again, like I said, I think we try and pitch ourselves as the true win-win-win option. And while it was obviously tough to figure that out for the seller, and it definitely we incurred some legal fees, it's just kind of, represents who we are, and it just happens sometimes.
That's super interesting, your approach, because I would say most, self-funded searchers, individual buyers, they're doing QB later because of the costs that get incurred, but it really
Right.
becomes kind of a non-starter if that doesn't turn out, somewhat close to what the seller says the numbers are.
Right. And if the quality of earnings is bad, and if something comes up, the deal's no good. So I think that's sort of part of our thought process. Again, we're a small family office. We don't have money pouring out of our ears, so we're definitely thoughtful. Like, we don't bring in the lawyers until later because we're trying to keep costs low. Um, we're also trying to, be cognizant of everyone's time. No one has enough time in this world, so you're
True.
just trying to make sure you allocate it appropriately. But yeah, we had another deal recently under LOI, and something came up in the quality of earnings, and so we kind of, shut it down at that point because it just didn't make sense for anybody involved. So definitely an important part of the process.
And what's smart with the QB is, it's not really taking up a lot of your time. It's
Mhm.
third party time. So
Yeah, it is one of those things too. You want to make sure you're managing the relationship between the seller and the guys doing the quality of earnings, because everyone has a job to do, right? The sellers are still trying to manage their business, and the quality of earnings can be frustrating. We work with Whipfly, and they do a pretty good job of managing that and understanding that the sellers, it's not a fun process for them, so they try and be cognizant of that. But they also have a job to do to make sure that their credibility, and that their product is not, belittled or, looks bad, because I'm going to take the quality of earnings and I'm going to give it to the banks and say, hey, here's what Whipfly did. This is Whipfly's work. And so if anything comes up lame or bad, they look bad. So that's why sometimes sellers are like, why are these guys asking this? This is super frustrating, super annoying. I think, and most sellers do recognize what's going on, but managing that relationship is also part of my job.
no, that makes a lot of sense. And what who are the lenders, the types of lenders you guys work with? Because you mentioned, it's usually with manufacturing, you have assets, obviously. But are these sort of like local banks? Are
Mhm.
these, it's obviously not an SBA loan, which a lot of
Mhm.
individual buyers use. Tell us more about that.
Yeah, like I said, our pitch to business owners is we really try and not rock the boat in any way possible. So we have some local banks in the Philadelphia area that we work with. We work with First Trust Bank, Truist. Truist is more of a national bank at this point, but we work with them here locally. But we always say to businesses anywhere, and we look at businesses all over the country. But we always ask them, like, do you have a current banking relationship? They'll say yes, and we'll be like, okay, that'll be great if you want to introduce us to them and see if they want to be a part of the deal, because it's fun for us because we get to expand our network, but to us as well, sometimes it's a good, gauge of how much they like the credit, because they knew
Mm,
somebody else is coming in. And if they really like the business, they usually give us a pretty competitive, interest rate. And if they don't like the business and they either don't give us a bid, or they give us something that's maybe higher and out of market, that's what it tells us, like, whoa, maybe these guys aren't perfect, So thus far, every single time we bring in the incumbent, they give us a really good rate, and we usually work with them, just because it's easier for everybody involved. Like, it's easier for us to get a new relationship and find a new relationship as an office of four, rather than a business of 70 employees and with a CFO who's had a long relationship with a certain bank have to learn, you know, a Philadelphia bank.
right. No, that's super smart. That makes a lot of sense. I'm also curious as part of your process. Um, I think with a lot of buyers, sellers don't really want to introduce them to their team as part of
Hmm.
diligence. They're worried about, it leaking, the sale.
Hmm.
And for you guys, it's like a very essential part of the process. At what point do you kind of approach the management? Is it one of the first discussions you guys have?
Hmm.
What does that look like?
Um, So I'm glad you asked that question, because I was thinking about how way I could introduce this myself. But my dad's been using this guy, Larry Coons from WLA Consulting, um, for past 30 years, and it does a really good job of sort of showing, what someone's strengths are and someone's weaknesses are. So it's a two-part assessment. The first part is, it's like a GMAT. I tell people, you have 10 minutes. The first question is 1 plus 1, and then it gets harder from there. And there's about 40 questions. No one ever answers the full 40 questions, but that's sort of more the aptitude side. Then the second part is more of a management simulation where it'll ask you a couple questions like on a scale of 1 to 5, how important is honesty? 1 to 5, how important is courage? Scale 1 to 5, how important is respect? And then after later in the assessment, it'll be like, all right, honesty, courage, respect, rank them 1, 2, 3. And what that does is, again, he has way more of a, science to it than I'm giving, but it just shows, what managers are like under stressful situations. And so that's something, we know sellers don't always tell their management team that there's a sale going on. So we lean on the seller to sort of, tell us, when do you want us to meet them? What is your vision for this? But if we can't meet them, sometimes we use this profile, and we let the seller sort of dictate how that happens, if and when that happens. But we use that to get a better sense of who they are before he actually introduces us to them. So
And usually, does the seller have a good sense of like, I know my management wants equity, like wants to keep growing with this business? Like that's something that they already know, I'm guessing.
correct. It's an interesting question. The answer is no. They don't always have a good sense for it. And for us, sort of like the banks, the incumbent bank, verifying through a good competitive bid, if we meet the management team and they say they don't want to own the business, and again, the terms we give are about as favorable as it gets. In terms, there's no personal guarantees, um, interest only, and we usually structure the interest only loan through a bonus paid by the business. So it's
Mhm.
really like no money is coming out of the manager's pockets. But if they still don't want to own the business after that, obviously, we don't invest in any business anyway, but it is sort of like okay, maybe this business isn't right for us.
Right.
Hmm.
That's super interesting, and that's it's very smart with the test, by the way, because I could totally see a seller being like, "Hey, I'm just doing this for leadership training." A lot
Right.
of
So
businesses do that, so
So yeah, and again, we always try. And for the record, my dad made me take the test before I walked through the door, and I said, "Dad, what the heck? Like 20 at the time, 25 years, and I'm your son. You don't know me." He's like, "BG, you take this, you see what happens." And so it was great because I did it, and then I got on the call with Larry. I had never actually met Larry or talked to Larry before, but. It was like staring into my soul. People believe in psychics, like tarot cards, whatever those cards are.
yeah.
This guy is like that, but way more intense, way deeper. And so much so, my wife, who doesn't work for the business, she took the assessment and she got on the phone with Larry for an hour. And my wife, God bless her, she's very introspective, always trying to, improve. She scheduled two more separate calls with Larry that all also lasted an hour. And she loved it. She loved every bit of it. And he obviously is a great resource for us. But for those that we work with, even for those that we don't end up partnering with, they always say how valuable the Larry Coons part was to them and the WLA consulting because it really sort of was a good way to understand who they are as professionals.
That's super interesting. And does Larry kind of give you a, hey, this is like a yay, like huge red flags in this business team, and or like, hey, they really meshed well together? What's kind of the deliverable there to you
Mhm.
guys, and how does it actually help you make a decision, or is it just like this is that dynamic that you can expect?
Yeah, so Larry, again, if it's depending on the team, I'll use effort as an example. Effort was a funny deal for us too. Again, speaking to how flexible we are. We usually do management buyouts, like I said. But we went to the seller. We're like, all right, how many people were you thinking of us on the management buyout? With thinking 1 to 4 people. He goes 15. We were like, 15? Like that's not going to work. That's way too many K1s. That's just not going to work. And he's like, 15 employees. They're key to my business, and they need ownership. So we actually did a stock appreciation rights program with them, which is another form of employee ownership. A lot easier. It's sort of like synthetic equity,
Okay.
and I can talk about that more if you want. But what was great with Larry was we got them all profiled, and Larry then has he has like 60 different characteristics that he's looking at, and he put it all in Excel and compared them, and then we got on a phone call with him, and we're going through all the results with him, and there's never been somebody's assessment came back and he's like, you absolutely can't do the deal. Because that's sort of not the intent of the profile. The profiling is more to understand the dynamics, understand how to communicate with the managers. Some people like getting coached hard. Some people need a little bit softer. Some people like more direct communication. Some people like things over email. Like Larry is able to identify those small little traits within individuals, and then obviously on the greater whole as a team. And for the effort deal, for the record, he looked at it and said, you have to do this. This is a
Wild.
home run management team, and the results showed. I mean, obviously, that big jump, some would say it was surprising, but based on every single piece of data we saw, including the Larry Coons profile, wasn't too surprising.
I guess tell us how about the stock appreciation rights program
Mhm.
that you just brought
Mhm.
up. How did you structure that with 15 people? I mean, that's crazy.
Yeah. So again, this is just sort of education on employee ownership. We're big believers in employee ownership. And there's the forms that I know of. There's profit interest units, which I don't know a ton about, admittedly. There's the management buyout, which we've been doing for a while. One of the lawyers on the effort deal brought up the stock appreciation rights, so we had no idea about it until the deal. And then the last one is the employee stock ownership plan, an ESOP, and that is something that we are actually very, very seriously exploring and hoping is a big part of our future. But for the stock appreciation rights program, it's great because the way we defined it is, okay, here are the 15 people invested in it. Each person has this many units, this many SARS units, and um, pretty much when there is a next sale, and if in the next 5 of 7 years, effort clears certain EBITDA thresholds, their units vest. So 20% for every year. But like I said, I don't think any of our thresholds were above $2 million, and in
Mhm.
their first year they were three and a quarter. So the first 5 years they're going to fully vest, and when the business sells next, transacts next, those guys are going to get a payout of it. But this is now kind of diving into a little bit of the vision for Brynavon. You know, like I said, our average hold is 13 years, which is a long hold, so some of those guys might not see it until then. But what we're trying to figure out is how we can sell this business to an ESOP. And so the dynamics there are incredible because let's say we sell it to an ESOP in 2027. Um, those guys will have presumably all of their stock appreciation rights, units vested, so they're going to get a payout there, and then they're going to be owners of the business all over again through the ESOP, and they're not going to have put down any money. So in theory, they're going to get two bites of the apple.
That's fascinating. And
Yeah.
I guess going back to the original structure, how much of the business is the management owning when you guys first transact to when you guys actually buy the business?
Right. I don't know if I said this earlier, but our typical we lend enough money to the management team to own 20% of the business. Um, that's usually our floor. If they have other capital, friends they want to bring on the deal, they can acquire more. Again, we're flexible. Um, but we will always say we usually take at least 51% of the deal, a majority, and that's not from a voting, we're gonna, implement our authority, yada yada yada. It's more for the banks because the banks just want to know who's in charge. So they feel more comfortable when we have the majority. But again, I always tell business brokers and potential sellers, I give them the contact card of all of our current partners and say, why don't you ask these guys, the people we work with, how we operate and what we're doing, um, just to give them ease, because there's definitely plenty of people in this world who buy businesses expecting to, you know, strike down the table and do things their way, and that's definitely not how we roll. We're 100% partners, and what's great about co-investing is what's good for the management team is what's good for us.
No, it's great that you references that you just openly share. And just
Mhm.
going back to this Larry Coons test, I'm starting to feel like everyone should be doing this, regardless of whether it's a management buyout, right? Just to understand,
Mhm.
if there is management, if this is a good team, because that's a lot of what you're buying as well.
Correct. And there's plenty of other assessments out there. They're slipping my mind right now, but there's some big ones. But in the larger businesses, 20 million EBITDA, 25 million EBITDA, I'd argue it wouldn't be as worth it because it's a big machine. It's running itself. You can sometimes cut people in and out just like that. But at the small business level, one bad egg can sink the ship. It can totally ruin it. If you're not aware of that, and if you are not trying to find a solution towards it, you might not be buying the business you think you're buying.
That's interesting. And tell us more about, post acquisition in the early days of that transition. What does that look like? Because obviously management staying on.
Mhm.
Um, What does that look like for you guys? Like, what does your role look like for in the first, 90 days, 6 months, year?
Yeah, we always say sort of for the first year, we will have monthly, we'll be at the plant, wherever, at least once a month. And that's more obviously just to keep the flow of communication going. We find in person much better than Zooms and things like that, and less disruptive. Zooms sometimes just really throw off people's day. But it's a good opportunity just to make sure that everything's going accordingly. Like I said, our model I love because there is, as soon as it closes, it's not like somebody's out, there's something missing and we needed like all hands on deck immediately, which does happen sometimes with deals. We really try and impress upon people, things will continue on as is. And again, I love sharing through stories with effort. It was very funny. The seller wanted to announce to his team of 60 employees about the sale. And so we're on the big manufacturing floor and he's got his headset on. And it's the closest I'll ever get to being a professional athlete, where he announced that he sold the business and then he was like, please now welcome, the Brynavon Group. And so we came from the office, all of us are trotting out. And my dad gave a little speech, I gave a little speech, and that was that. There was a couple questions, but in the big setting, no one wanted to ask them. Then after it ended, one employee pulled me aside and he's like, "All right, Guy." I'll never forget. He called me Guy. He goes, "All right, Guy. I've been through this before. Last business I worked for got sold to a private equity firm, and I always have to try and remind people we're not private equity, but I've seen this before. Like, tell me what's really going to change. I've seen this. You tell me what's going to change." And his name was Todd. I said, "Todd, look." Um, I promise you what we just said about things staying the same is the truth. Bill over there is going to be your president. Colleen's still going to be on board. Charlie, the seller, is on the board of the business, the company. The only difference is you might see us here a little more often than you had before. And if it's anything different, you tell me that I'm lying. And so, we're now coming up on 3 years of that transaction. And Todd, I see him occasionally here and he laughs and it's a good story, but we've held up our end of the bargain.
No, that's fantastic. And what is the seller's role? Usually, like, how do you manage that seller transition? Because I'm sure, some businesses maybe there is more seller dependency still. Others maybe the management team is fully, running the day to day. What does that look like?
Yeah, we normally make sure that if a business, if a business really does have a seller dependency, like a serious seller dependency, we don't do that deal because it doesn't fit our model.
Yep.
If there's a little bit of a seller dependency, we're obviously managing that transition carefully. And there's, you got to have a lot of different tools to do that, depending on what the situation is. But it's an interesting conversation with the management team, whether that's one person or four people. And it's an interesting conversation with the sellers. Sometimes sellers still want to be involved. Sometimes sellers don't want to be involved at all. Sometimes managers want the seller to be involved. Sometimes they don't want them involved at all. And so um, we just sort of we're flexible. So for the effort deal, the seller is still a board member, but he doesn't have any equity. For a deal that we're looking at right now, the sellers are actually rolling over equity into the deal, and presumably they'll be on the board and they might be involved a little bit. We're still hashing that out. Um, Other times, sellers they're clean, they're see ya. So I wish I had a better answer because it just depends on the situation, but it is obviously a consideration as we're going through before close.
That's super interesting. I want to be sensitive of time, and I know this is going to be top of mind for a lot of people, but you guys are invested in manufacturing. Given what's happening right now with tariffs,
Mhm.
domestic manufacturing, what are you seeing the impacts on domestic manufacturing right now? Maybe in your portfolio companies, just like where do you see things headed?
So what I have seen in the last 3 months is, and this is crazy almost to say, but all of our companies and my friends' companies and people I talk to, they've all had really strong Q1s. Whether that's a product of people buying quickly because they fear prices going up, I don't know if that's the case. Maybe that's the case, but everyone's reporting really strong numbers and there's some companies that that have started to have longer lead times on things, so maybe that'll start trickling down more as we get into the summer. But everyone's reporting really strong Q1 numbers, and for our portfolio companies, um, thinking about effort, thinking about Pacific Sheet Metal, I mean, there's definitely healthy backlogs, the strongest backlogs we've ever seen. So it's almost sort of the antithesis of what you're seeing in the news, which is a little weird,
Exactly.
but it is the truth. And you know, my fear when I was thinking about tariffs and things like that, all of our companies source all of our stuff domestically, which is great. My
Yeah.
fear has been those, those that don't source domestically, they're going to go to our suppliers and say, hey, Brynavon's company is paying you $1.25 per pound of that. We'll pay you $2. And then they're going to go to our company and say, your new price is $2. That's been my fear. I haven't seen it. Um, but yeah, like I said, it's against kind of what I guess is everyone else is saying. All companies are doing pretty well right now.
Fascinating. And that said, are there any specific niches within manufacturing that you're particularly bullish about right now?
Um, Anything that has government exposure, government contracts, I think is good, especially when it comes to military stuff. You see a lot of those businesses. You see there's a lot of spending in the government sector, um, for things like that. So we always like some people see government as a hurdle and scary. And that's because what's great about government work is they definitely have certain expectations when it comes to cybersecurity, quality of product, things like that. And so if you don't check the box on those, if you haven't made those investments in cybersecurity, you're not going to get a look. You're not going to get the deal. But at the same time, if you do have the deal, it's pretty sticky and it's high barriers to entry for others to come in. So if you could have any exposure to that, that's great. Um,
How do you
like,
think about Doge right now with that? With that, because obviously a lot of contracts are being canceled, but do you not see that, impacting some of these businesses you guys are in your portfolio or that you're looking at
right.
acquiring?
Doge, from my understanding, I guess when I say government, I'm definitely thinking more military. As far as I know, Doge hasn't struck the military budget because I don't think Donald Trump would
Yeah.
would be in favor of that. So yeah, Doge has not truly impacted anything I've seen. Now I have some friends that are in the real estate world, and hearing their perspective on Doge and some of these, Section 8 housing is one in particular. It's night and day almost. I almost feel guilty that even with the tariffs, like all of our companies, people I speak to, everyone's we're pressing along as is. It's hard to plan in this world with anything in the government, but there's definitely certain people that are really, really being affected by what's going on.
Anything else that you're excited about, or any sort of exciting deals that um you've looked at, in the recent past?
Yeah, like we have a deal under LOI, which I'm super excited about. The other data point I will share with the world is, I think I said this earlier, I always loosely pitch banks on a deal before we get the quality of earnings finished, and then when the quality of earnings is finished, I then bring them in. I've never had so many banks knock on my door saying, "Hey, what's going on? Like, we're ready to go. Let's do this deal." And what that tells me is that they're really not seeing a ton of deal activity, which maybe is because of Trump. Maybe it's because of the tariffs. Everyone, I also think people might not have had great 2024s. Obviously a lot of expenses went through the roof. We saw that through our portfolio. Um, so people might just be, sitting on the sidelines. But with that said, banks need to put their capital to work, and so now is as great a time as ever in recent memory, where buyers really could get some good deals from banks on capital. So I would encourage those, that are maybe thinking twice, maybe afraid of what's going on, to really try and find an opportunity because there's plenty of people out there that need to sell their business, and you could probably get some pretty cheap capital out there. So that's
Yeah,
exciting.
I totally agree with that. I'm definitely seeing that too.
Hmm.
I guess the last question for me is just, any sort of final words of wisdom, especially for first time buyers, or, folks maybe even, in your shoes right now.
Yeah, some of the best advice I have, and in my short 6 year career, it's never be afraid to ask for help. I mean, I think what I love about this world is that, even when I go to something like the figure eight deal makers, or even your community, I'm sure you see this, is while we're all trying to buy businesses and we're all trying to find the right ones, we're never afraid to help people. I think one of your questions earlier was sort of who's my competition? Who am I losing to? Private equity, independent sponsors, MBAs. Sure, that's definitely a reality, but um, those people are also the ones that are helping me find deals. Like I said, it's great to have bankers and brokers, but I've had people that have sent me deals like, "Hey, this wasn't a fit for us, but it sounds like it would be a great fit for you." And even for me, there's friends of mine that are buying small businesses, and they say, "Hey, can I have 30 minutes of your time just to ask you a couple questions?" And those are the relationships that I now ping them, and I'm say, "Hey, are you seeing this in your specific world? Because obviously I look at a lot of different businesses in different industries. Some of my friends have bought smaller businesses in specific industries, but it's great for me now. I'm like, hey, can I ping you? I just think we live in such a world, and you do such a great job of this, where knowledge is meant to be shared, and I think there's so many people that want to help. If you're trying to buy a business on your own, just never be afraid to ask anybody, for help. I think maybe again, I see the good in humanity, but I think people really do like helping others. It makes them feel good, and so there's a lot of tricks out there that I don't even know. But if you aren't afraid to ask for help, it could go a real long way.
That's great advice. And kind of from that, if people want to reach out, where can they find you?
Yeah, so I'm on LinkedIn. I think it says George Lemon because I wanted to get verified, but like you said, I go by BG Lemon. We're at Brynavon.com. My email is glemon3@Brynavon. I'm on Twitter.
You can
So
find
there's
them everywhere.
yeah, there's plenty of places. Never be afraid to reach out. I love talking to people, just talk about the world and what's going on. So if anyone is interested, yeah, I'm definitely available.
Well, VG, this has been great. Thanks for being so generous with your time.
Mhm.
Sorry we went over a little bit, but this
Yeah.
was fantastic. And yeah, excited to see, where things head for you guys over the next year or two during these crazy times. So
Yeah, crazy times, but lots of opportunity. And again, Helen,
agree.
thank you for having me. And I think what you're doing is really, really special. And I'm excited to keep following your story as well.
Really appreciate it. Thanks again. We'll talk soon.
Absolutely.